Hello, welcome to this week's Forex Outlook here at xm.com. My name is Rafi Bajan, currency analyst, and here is our chief economist, Michalis Sorinjadis. So, Michalis, we have saw quite a bit of choppy trading this week in Forex markets. We did see a rebound in risk appetite early in the week. Then we saw those rising Syrian tensions. But today we are seeing that risk sentiment back on track. So, please, can you tell us what were the main drivers?
I think definitely, Rafi, as you said, the main theme was this turnaround in risk sentiment. We started the week quite scared about the trade war, and the worries about the trade war kind of died down because there was a conciliatory speech by the Chinese leader. The US president also made some conciliatory remarks. It didn't seem Neither of them seemed very keen to start a trade war, despite what went on the previous week with the announcement of plans to raise significant tariffs. And this helped the stock markets to rally quite a lot. We did have expectations of an imminent strike against Syria, against the Syrian government on allegations that it had used chemical weapons. It had performed a chemical weapons attack within its own territory. But at the same time, there were news that this attack was not as imminent as first portrayed. So this led to a significant rally in stocks. Safe haven currencies like the yen did poorly. Currencies that we associated with the risk sentiment like the Aussie, the Kiwi, and the Loonie did very well. But also the best performer was the pound, and this seems to be, there was a short squeeze, maybe some euro weakness, maybe some expectations, some hawkish remarks from the Bank of England, definitely drove the pound beyond some key levels.
Now let's look at the euro, because the euro was also doing rather well early in the week, but its rally stalled just below the $1.24 level. So why did the euro retreat?
Well, the euro had initially gotten a boost because there was some remarks by the Austrian central bank that were interpreted as hawkish. However, a spokesman from the ECB came out and spoke against those remarks, which quickly led to a sell-off. Subsequently, the ECB minutes were also, I wouldn't say dovish, but let's say not as like a little less hawkish than expected. It sounded that the ECB did have some worries. This may be as opposed to the Fed's message. The Fed's message from the Fed minutes that were released this week was relatively upbeat, which helped the dollar. But overall, it seemed that the euro's rally for now is coming under a little bit of pressure. The data is not as strong. We have some reservations from the ECB to accelerate its stimulus withdrawal, and this is definitely hurting the euro. Having said that, Rafi, I understand it's a busy calendar next week. What do we have to watch out for? What are the key releases that investors are going to be focusing on?
So that's why it's going to be a busy week. Main data will be inflation. We already saw US inflation out this week. We saw US inflation rising to one-year high of 2.4%. Next, we're going to hear the inflation reports out of the UK, Canada, Japan, and the final readings out of the Eurozone. We're also going to have some retail sales data, mainly out of the US, the UK, and Canada, as well as job numbers out of Australia, as well as the UK. We're also going to have the Bank of Canada policy meeting. And given what you said earlier about the Loonie strong gains this week, and with the NAFTA, the hopes of a NAFTA deal rising in recent days, we could potentially see a more hawkish tone coming out of the Bank of Canada and the Loonie extending its gains. And we're also going to see some business surveys, mainly the German ZU, which is very closely watched, especially given the recent indications of slowdown in the Eurozone. That's going to be in particular focus.
So relatively busy in terms of data next week. At the same time, we don't see at least for the dollar and the euro, the two most widely traded currencies, something that is going to move them that much. Maybe it's to cause a huge movement. There are definitely potential for the Aussie employment report to move that particular currency, which did quite well on the recovery in risk sentiment this week, and of course the UK sets of numbers with inflation, retail sales, and employment also will be closely watched, especially as we said that sterling has been on the move lately.
Indeed.
Thank you very much, Rafi, for your views. Thank you everyone for watching, and have a great day.